here as we're ready to get started. Okay, so today is the next installment in the Maximum Performance webinar series. For those of you who've not been on our program before, we started this series last October as an opportunity to get together a community of learning, people who are dedicated to, the 5%ers in life who take the time to invest in themselves and improving their skill. It kind of goes back to Abe Lincoln's quote of, if I had 6 hours to chop down a tree, I'd spend 5 hours sharpening my axe. And I want to applaud all of you for participating in today's program. We look forward today to being an exciting program. Hopefully you'll get a lot of value out of today's program. And make sure you stick around all the way to the end of the program, because we are going to have some quick tips and tools to help you implement the ideas at the very end of the program, as well as a couple of special free gifts for you to just thank you for participating and appreciating. So today's program is how to double your income with more purchase business. This is one of my favorite topics of all time. So some of you were on our series of webinars, Brad and I and Greg Frost and Renee Rodriguez did back in January, the Planning to Win 2013 program. And at the open of that program, I challenged all of you to thinking about what would your pipeline look like if interest rates jumped to 5.5%. Well, guess what? Interest rates have jumped to pretty darn near 5.5%, and now we've got to be able to shift our focus to how we generate more purchase business, and that's what the focus of today's webinar program is all about. But I'm going to do it a little bit different way than maybe you might have perceived in the past. And one of the things I've been teaching as a system, and one of the things that we've helped literally hundreds, if not thousands, of loan officers work their way through the challenges and dynamics of how do you build effective and strategic partnerships with business development partners that you can turn into very profitable relationships. And by the way, you may notice that my tone and phrasing has changed a little bit. I don't refer to real estate agents, home builders, financial planners, CPAs, human resource directors for large employers in your market. I don't talk about them as referral partners anymore, which was kind of the industry standard most of the last 15 years, maybe even longer. I talk about them as business development partners, because I want to shift my thinking from being on the taking side of the relationship to being on the giving side. And even just that subtle, powerful mind shift of thinking about it differently and approaching the conversation differently about how I can help you all become effective and productive business development partners with the agents, financial planners, CPAs, home builders, insurance agents, and anybody else who daily interacts with people who could benefit from changing their housing situation, buying, selling, or refinancing. And so that's kind of what we're going to go into today. Let me start by asking the question, what are partners? Proverbs says that plans fail where there is no counsel, but succeed when counselors are many. So what does a true partner really mean? What does it mean to be a true partner or business development partner with your agents, CPAs, financial planners, et cetera? And the best way I've found to explain this over the years is to think about the concept of the draft horse. I grew up near St. Louis, always got to see the Budweiser Clydesdales at parades, and that was always fun. I've always been fascinated by these animals, so when I was in college, I started doing some research on these suckers and realized that the average horse, found out that there was a group of scientists that did a study back around the turn of the last century, the early 1900s. They found that they were doing a weight test study on these horses because these were the primary source of power. The study eventually became known as the horsepower study, for any of you who want to look it up. But anyway, what they found is that the average draft horse could pull about 12,000 pounds by himself. So it stands to reason if you had two horses pulling, but separately and independently, you'd have at least double the value, right? You'd be able to generate over 24,000 pounds in pull. The problem the scientists ran into is when they tried to scale the study up and they hitched two horses pulling together, the record is over 104,000 pounds of pull, or roughly 8 times the results of one pulling by himself. Now, some of you may be saying that's kind of crazy, that may not be possible, but let's even take it one step further. What does that look like in the typical realtor and mortgage planner, mortgage advisor type relationship? Let's say that separately and independently we've got two strong producing individuals, real estate agent who's generating about 15 leads a month and a loan officer who's generating about 15 leads a month. you'd stand to reason that you'd have about 30 leads that you could pass back and forth. But see, if we're working separately and independently for our own individual benefit, it becomes very quickly one of those tit for tat, you send me a deal, I'll send you a deal, and we keep a scorecard type relationships. Not really creating that same kind of leverage that we saw in the horsepower example. So when I talk about partnership, what I'm talking about is two working for the same common goal. In other words, a collaboration or partnership. Now, if the 8 times rule holds true in this type of a partnership like it does in the horses pulling together, we can generate potentially upwards of about 120 leads a month. Now, all of you may be thinking that's totally impossible, but what I want you to do for a moment for me, for your own benefit, is to spend that possibility thought for just a moment and ask the question, okay, it may not be possible, but if it was, what would it look like? So what we're going to explore is how we can actually do a lot more than double your purchase business through effective collaboration and partnerships. Now, by the way, some of you may be asking the question, why are the 2 horses able to pull 8 times what one can pull by himself? Well, there's some physics and geometry involved. It's probably way over my head, but I've always been a little bit of a science geek. And one thing I did realize is that there's a mechanical advantage because there's a tool being utilized. And the mechanical advantage, the simple machine that's being applied here is what's called a lever, right? Well, the basic structure of a lever is you've got 2 main parts. You've got a bar and a pivot point. Now, the problem is if I have that tool set up incorrectly, if I just have that pivot point right in the middle of the bar, I can push down with 100 pounds of force over here, and I'm only going to get 100 pounds of lift over here. Now, it may be easier for me to push down than it is to pull up, but I'm still applying the same amount of energy, right? But the interesting thing about the tool is if I'm using it properly, if I shift that pivot point a couple feet to one side, all of a sudden 100 pounds of force over here gives me 1,000 pounds of lift over here, and that's the appropriate application of leverage. So when we think about how we create leverage with true business development partners, let's talk about how for just a second. The first one is a concept we call alignment. Now, a lot of this has to do with alignment of purpose and concept and idea. How are we going to make sure that we're working together for a common goal? Well, the simplest answer to that question is we've got to ask them what's important to them, what's important to us, and we've got to have a conversation about what we could do together that supersedes what either of us could do apart. Because the practical reality is 1 and 1 is kind of an 11 type of fact here. Now, by the way, some of you may have noticed that those 2 horses pulling together had blinders over their eyes that kept them totally focused on one destination ahead, common and in alignment goal. The second thing that we can do is we leverage each other's strengths and we edify and endorse each other more strongly than either of us could do for ourselves. Thirdly is we share the load. We distribute evenly and we take advantage of our unique and different talents and abilities and the resources that we have at our disposal that we can collaborate on. Let me give you a simple snapshot example of this. For example, let's say we want to go out and start doing a series of home opportunity workshops, reaching out to renters in the community and educating them on how powerful of a home buying opportunity they have right now. We'll talk a little bit more about this later in the program. Now, we may try and set one up ourselves. In fact, as coaching experience, we've had successes and we've had some clients who didn't listen to our advice and had miserable failures with it, spending thousands of dollars renting a hotel room, hundreds of dollars in advertising, and they had 3 people show up. Well, that's not an effective home opportunity workshop, right? However, what if we teamed up with a realtor and an insurance agent? Now, if you think about insurance agents, for example, they have huge databases. When you've got an insurance agent who only makes a couple $100s a year per policy, that agency literally has to have thousands of customers to be profitable as an insurance agent. The other element of that is you got to think about, how do you identify the renters within that insurance agent's database? Now, here's the challenge. You say renter to an insurance agent, and his brain shuts down. because renters immediately starts getting an insurance agent thinking about renters' policies. And keep in mind, the average insurance agent only makes a 10 to 15% commission per year of the annual premium of that policy, meaning that renter's insurance policy takes about the same amount of paperwork to create as a homeowner's policy, yet that agent's only going to get a 10% commission of $120 to $150 a year policy. It's not worth the hour worth of paperwork to make 12 bucks, right? The trick is how you introduce that concept to the insurance agent. You see, the insurance agent has a whole bunch of people in his database that are not homeowners yet, meaning they're renting where they live. But you have to approach it from a different perspective. See, if you get the insurance agent thinking about how many auto-only policyholders are in his database, then you can identify, based on how good of a job most insurance companies do at cross-selling both home and auto policies to the same customer, that there's probably an 80% or better chance that the person who has only an auto policy with that agent rents his home. And see, if we talk to the insurance agent about how to help his customers seize the current housing opportunity, then all of a sudden we can create a massively, significantly more effective result at introducing a home opportunity workshop, for example. Now, how do we position ourselves, though, to be able to even open up that conversation? How do we get agents, financial planners, insurance agents, realtors, CPAs, and human resource directors at large employers to actually even take our phone call to begin with? Well, the first thing we've got to realize is we've got to find a way to be unique and stand out. Now, I got to tell you, and Brad, I'm going to ask you to jump in here and comment. How many loan officers a day are you getting phone calls from right now in the current market?
I mean, if we get a call, it's kind of a random deal. There's not too many people focused on really trying to get our business. It might be just like a cold call here and there. So it's different. I mean, it's different every week. It depends if they are really hungry or not, and if the market turned or not, to be honest with you.
Interesting, interesting. Well, and Brad, you're in the unique position that a lot of loan officers are afraid to call you because you're known as a top-producing agent, right? I mean, they can look at your MLS stats, see that your team has pushed over 100 transactions a year the last several years, and they leave you alone. By the way, guys, if you want to know a little secret, there's a lot less competition at the top. Now, for the average agent who's doing 20 or 30 deals a year, likelihood is they're getting pounded. One of my clients up in the Northwest, in the Portland, Oregon area, a couple of weeks ago shared with me that they brought in a couple of top-producing agents in their market to do sort of a panel discussion as part of their weekly sales meeting. And these 5 agents were saying they were averaging 3 to 5 phone calls a day from different loan officers in that community. Now, part of the reason for that, and by the way, if you ask them what is the typical loan officer pitching when they make the call, all of them are basically promising the same thing. I mean, Brad, what do you hear when a new loan officer tries to get your attention and get your business?
Yeah, well, there's a couple things I'm going to comment on. First of all, I mean, they're just calling to introduce themselves and say, hey, if you ever get a deal that doesn't work out, or it's that whole throw me a bone kind of conversation. And, I mean, I think whatever agent you're talking to, that's not enticing me to remember who you are at the end of the day, because everybody's saying the same thing. Hey, if you get in a jam, give me a call. Well, I got 10 people to call when I get in a jam, you know.
Absolutely. And my experience is, having worked with and talked to literally hundreds of agents and having coached several hundred agents over the years, is that the loan officers all make the same approach. And usually it has something to do with great programs, great pricing, and great service. And the reality is any agent who's been in the business more than 6 months has had a deal that blew up because the loan officer didn't do his job right, overpromised on the front end, didn't do a thorough enough pre-approval review on the front end, let a deal get into contract that never should have been under contract, and failed to provide the service that was necessary to the agent. I mean, 9 out of 10 agents, if you ask them, they just want to know an honest and thorough answer as early as possible in the process of whether the buyer can qualify or not. And by the way, a 5-question pre-qual ain't going to cut it. You know, how much do you make, how much do you, where do you work, What's your basic debt load look like? How good is your credit? I mean, how many loan officers out there have you bumped into or run across that spend 5 minutes on the phone with the borrower, tell them they're pre-approved? I mean, say, you know, I mean, I've had this experience walking into companies that I used to, as when I was a wholesale rep, walk into a company and find I overhear the loan officer side of the conversation that's, you know, how are you? Okay, great. Yeah, how much do you make a month? Okay, what kind of debts you got? You know, what are your monthly payments on stuff? How much of a house are you wanting to buy? How's your credit? Yeah, no, that should work out. Okay, so call me back when you got a contract, okay? Now, the buyer leaves that phone call thinking they're pre-approved, right? In today's market, can we afford to let buyers get out and shop who haven't had a thoroughly verified pre-approval review? That we haven't taken the time as a loan officer on the front end to slow the process down enough and make sure that we've crossed our I's and dotted our T's and validated the income, asset, and credit documentation to make sure that they really do qualify before we let them go look for a property.
Well, let me give you a little bonus. I'm going to give you a little bonus behind the scenes for everybody that's on this call today. You guys are going to find out from a top agent what it's really like. So pay attention to this. In 21 years of selling real estate, over 1,800, 1,900 sales, I have had 2 loan officers in my entire career that they were the guy we went to. Now notice I didn't say one, because eventually after about 6 years, one of them left, went to a different market, and then we were in turmoil for several years until our recent lender that we just got hooked up with that is probably the second best. The other guy was like the best, man. I mean, he had a bat phone for us, and you know how real estate agents are. They just want to know answers. They just want to get answers to questions. All those other years, guys, we had agents in our real estate office who rented office space. They work real hard to catch the business, and then they get complacent real quick. And if you guys want that little secret difference just to get the door opened where you can get to these conversations that Erik's talking about, just let the agent know that they really should not be trusting their business with just anybody. You don't want to just give your loans to just anyone. And here's the key point. You work way too hard to build that trust and that relationship with that client that you just throw a bone to somebody. Man, even use those words. The last thing you want to do is build this trust, build this bone to somebody. Guys, if you're looking for somebody who's going to back up the level of service you've brought to your client and help you enhance that into referral business in the future and get the most out of that one deal, I'm your guy. I mean, don't just trust anybody with your business. So when somebody has that type of, because that's what I'm looking for in an agent. I tell loan officers, I put way too much work into building a relationship. I don't want you to take me out for lunch. I want you to show me that I'm going to know what's going on, my client knows what's going on, that you're backing up what we do, and you're getting me referral business out of that. And every time there's a rough deal or a bump in the road, and my client has a bad experience, and actually your client has a bad experience, we all look bad. So just keep that in mind when you're talking to agents. They are really tired of always having to point a finger at somebody, something didn't go right, you've got to blame somebody. They hate it, and they lose business on it every day. So congratulations to all you for being on this call, because that's something that a lot of, I mean, I don't hear that being taught anywhere. So there's your little tip of today.
Absolutely. And the practical reality is, guys, that even at that level, I mean, that's just the basic job descriptions. You know, we always complain about the fact as loan officers that realtors tend to treat us like we're only as good as our last deal. Well, the reality is we haven't done anything to earn value that goes beyond one deal at a time. So that's kind of our fault. And I hope that's not too big of a slap in the face to you. But the other reality you have to be careful about is if you position yourself, if your value proposition to an agent is all about transactional credibility, your ability to get one deal done, well, here's the problem. I mean, world-class customer service is probably the most disbelieved term in the English language, because we've all heard that on the on-hold messaging while we're sitting on the phone for 45 minutes waiting for somebody to take our call, right? And the reality is 99 out of 100 loan officers promise world-class service, and 98 out of 99 fall completely flat on their face. So does it add to or destroy our credibility to associate ourselves with all those other boneheads who don't do it right? My value and what we help our clients understand is value that goes even above and beyond any one individual transaction. And see, what really makes us stand out is the benefit we can provide to the agent that goes beyond any one individual transaction. So like, for example, I opened up the call with talking about this idea of doing home opportunity workshops, right? We talked about the idea of leveraging an insurance agent's database. I mean, I've interviewed, over the past 7 or 8 years, even when the market got tough before the refis really started to kick off, I started immediately talking to insurance agents about the home opportunities that existed in their market. And I interviewed probably 30 different insurance agents. All of them had databases of 500-plus families. The more successful insurance agents had databases, active paying customers, policyholders of in excess of 1,500-plus, clients. And if you think about that, if, national statistics, what are home ownership rates across the country? Depends on your market a little bit, but it fluctuates. In fact, Brad, do you even know the NAR standards on that? I think it's somewhere around 60%, isn't it?
What was the statistic on what, Eric?
What percentage of the American population own their home versus rent?
Oh, yeah, I've heard like 40% of the America's equity or wealth is in real estate. So, but I haven't heard that other statistic. I'm not really sure.
Okay, well, the last time I saw the statistic nationally, it was like 58% homeowner, meaning 42% of the population is renting, right? So 42% of the population, so an insurance agent, let's say for simple math, has 1,000 customers in their database. That means roughly 400 families in that insurance agent's client base, active paying clients, are people who do not own their home. What's the probability of us introducing through a series of campaigns and messaging to that insurance agent, maybe 10% of that population, we invite them to a home opportunity workshop, and 40 out of 400 families actually, over the next 12 months, become homeowners through our efforts, working us, a real estate agent, and an insurance agent together in concert. Well, we just made a huge impact on 40 families. In addition, we put 40 new transactions in the insurance agent's pocket, which is probably approaching in the neighborhood of 5 figures a year of additional revenue. We put 40 transaction commissions, 40 sides worth of commission into the realtor's pocket, and we got the commission on 40 new loans. What if you only get that?
I want to throw in one more statistic, and I don't think I've covered this with you. I've covered it a lot, but I don't remember if I've ever talked to you about it. Here's something else to think about, guys. National Board of Realtors says that the average person moves every 5 to 7 years. You figure renters are probably even moving a little bit more than that if homeowners own their home. Let's just say, for simplicity's sake, because the market has been a little off in the last 6, 7 years, that now people are staying in their houses 10 years. So just for math, think about this. For every 10 people that you do come across in your life, not whether they're buying or selling a house right now, but for every 10 people, 2 of them are moving right now. And what a lot of people do, real estate agents and mortgage professionals, we grab those 2 for the next 10 leads that come through, and we start working with them. The next 10 leads come through, you got 2 more people, they're ready to buy or sell, so you start working with them. The next 10 leads, you get 2 more. Pretty soon you're pretty busy, I mean, as an average mortgage officer or an average agent. What is absolutely sickening is that 24 people, out of the 24 people that weren't moving right now, those 8 from the first 10, the 8 from the second 10, and the 8 from the third 10, 2 more of those people in each of those 8 are moving next year, and 2 more the year after that, and 2 more the year after that. So out of those 24 deals, you could have packed your pipeline's worth of business for the next 5 to 10 years of extra business. And what most people are doing is letting those 8 people just go away. And so every day we come in looking for the next deal, trying to keep our business going, and we had it all in our hands before.
Definitely. You know, cost databasing is one, by the way, Brad is an expert at. So those of you who have not been on one of Brad's webinars before, you know, strategic warm-up and drip marketing is one of Brad's areas of expertise, obviously a big passion of his. By the way, thank you to Scott, who just posted the stats as of April, 65%, down from 65.4 as of last year, which is the lowest level of home ownership percentage in the last, since 1995, according to the stats that Scott just posted for us. So the reality is you've got a whole lot of families out there who could benefit from buying a home, and it's not just the new people. What I'm trying to articulate here, though, guys, is that we need to focus on being more valuable to our business development partners than just the value we can provide them on any one individual transaction. Coach Brad shared with you strategies of how to capitalize upon the, you know, the every 10 people you meet or bump into, the 2 that are buying right now. So if you thought about the insurance agent's database again for that example, or let's take another example of that. You know, how many people do you know that are in a senior executive position or a human resource management position for a company that has, say, 500 employees? Well, you know, if 2 out of 10 or 20 out of 100, meaning there's about 100 families out of that 500 employees that are likely to move in the next 12 months. What if you were able to orchestrate a strategy in combination with that human resource director and a realtor in your community, and you as a financial or a mortgage advisor, maybe even bring in a financial planner, maybe even bring in a credit repair specialist, maybe even bring in and did like a series of lunch and learns for, for HR, for companies. All of a sudden, you put yourself in front of that 500 employees, and you have an opportunity to be in front of, and the first person that those 100 people think of, you as a team with the realtor, with the insurance agent, with the credit repair expert that you have the opportunity to work with. So as we look at this, what we're really talking about is this concept of value. Now, the easiest way I've found to describe what value really means is it's benefit minus cost. If we give a benefit that significantly exceeds the cost we're charging, and in the exchange of relationship with a potential business development partner, really all we're asking them for is to invest their time along with us. Maybe a little bit of their resources, and for RESPA compliance, it should be an equal sharing of costs. So if we're going to go use a local restaurant that can provide a per ticket meal condensed menu that they could put on a little half sheet of 8.5 by 11 paper, we could spend, 75, maybe they charge a $75 or $100 room rental fee for the meeting room. We do it in the evening hours. We do a 30 to 45 minute informational program while people are getting their orders in. When dinner arrives, we take a break and make it more of a social networking, and then we spend, after everybody's eaten, another 30 to 45 minutes cleaning up and giving them some action steps on how to move forward towards potentially buying a home. So you get 40 families there, and 4 to 8 of them are already thinking about it, and the other 32 are, likely going to be thinking about it in the not-too-distant future because they showed up for the event. What's the probability that we won't pull out of that event 3 to 5 additional sales? See, that's where we're creating a benefit that so far super exceeds the cost of the time invested and the money invested to pull off a program like that. The reality is, as well, if we loop in the insurance agent, he's got the database that can get a lot more butts in the seats. And so as a team, we can start to see how that 120 leads a month becomes a much more practical reality. And as we start to work beyond that, we need to think about how we extend that value above and beyond any one individual transaction. So when we really are sitting down and talking to them about how to be a resource that helps that potential business development partner go to a completely different level and overcome some of the one transaction at a time challenges that they face. And one of the ways I've articulated this over the years is, think about this concept. Let's say I've got $10,000 and I want to invest, and for simple math, I want to buy 100 shares in a company that's worth $100 a share. Well, there's probably 100 companies out there that are trading in that range right now. How do I know which one's a profitable, purchase right now that I can buy at 100 and watch it grow to 200, so I could sell it for a 50% or 100% gain 5-8 years down the road, so I'm getting an 18 to 20% return year over year? I don't know. I mean, I've got 2 options though for placing that trade though. I can buy 100 shares of company A through E-Trade and pay $8 to $10 a trade, or I can go to a full-service investment broker like a gentleman in a Merrill Lynch office, and I'll likely pay $150 for that trade. So why would I be willing to pay 15 times more for the same 100 shares of company A? Well, the reality is you know, from a transactional standpoint, I don't trust myself to pick the right company. I don't have enough knowledge. I'd probably have better odds if I went to Vegas and put it on a roulette table, right? So I go to the guy who has full-time knowledge and experience. His job is to study the markets and identify the value of companies, whether they're a good buy now or not. He's backed by a department that they're full, you know, that has a whole department of within a company the size of Merrill Lynch and the other bigger financial service firms. You know, they have whole departments that are market analysts that their entire job is all day long to study the economic performance of companies. So I'll pay 15 times more for that one individual trade because of the likelihood of making a successful trade. But how can that financial advisor even go beyond the value of that one stock purchase? How does he transform from being a vendor to being a true advisor, a true partner in my success? Well, the first thing he could do is, for example, maybe say, wait a minute, Eric, let's slow down and look at this from the bigger, longer-term picture. Are you really in position yet to make this investment? See, the reality is you could buy that company for $100 a share, and it could go down to $80 or even $60 a share before it comes back up to $120 or $150 or $180 a share 3 to 5 years down the road. So you need to be able to put this capital at risk and leave it alone and not touch it for potentially years. And if you don't have the risk capital, if you don't have the financial strength in other areas to support that, you probably have no business buying stock. I mean, for example, if this is the only $10,000 you have, what happens if your air conditioning goes out and it's a $6,000 repair? You're going to have to liquidate this stock at a loss. See, I think, Eric, you probably need to slow down and look at building an emergency fund first. See, now this individual has become the true advisor to me, way more valuable to me than any one individual independent transaction. And by doing so, he's able to create massive value. So let's talk about how that works. How do we become the advisor, the business development partner with the realtors, the financial planners, the CPAs, the insurance agents, and the HR directors that we have access to in our market? Well, one of the first elements of it is being the outside perspective. And the third element is being the accountability and credibility partner, kind of the masterminding or running buddy. I mean, think about it from this perspective. What do the Michael Jordans, the Wade Gretzkys, and the Tom Bradys of the world all have in common? Well, the simple answer is they all had somebody to hold them accountable, somebody who cared as much, if not more, about their own success as they did. Somebody to go from the outside perspective, the forest for the trees effect. It's so easy for us to see where our potential business development partners may be missing opportunities that are right under their nose. So maybe we become that person that gives them that outside perspective and guidance. For example, Brigham Young in 1998 did a research study about implementation and execution. What they figured out is when somebody says that's a great idea, they have about a 10% chance of implementing on that idea. Not a high probability, right? If they tell somebody about it and make a commitment to the plan, they'll jump that chance to about 50%. When they go out and actually tell somebody about it, though, they increase that to a 60% chance of following through. And if they make a specific commitment to a date of when it will be committed and ask that person to check in with them, they create a 95% chance of completion. So if we become that accountability partner for the business development, for the realtors, the financial planners, the CPAs, the insurance agents, and anybody else who daily is talking to people who could benefit from buying a home or selling a home, then we have the opportunity to be a true advisor to them. So let's talk about what it looks like to be a true accountability partner. One is we want to be the trusted advisor that has credible knowledge. We want to take the time, if we're not sure of where the opportunities exist, to study. I want to applaud all of you for doing that. You guys are engaging in resources and materials that are going to help you do that right now. You're investing your time to join the webinar of this format so you get ideas about where to find people who could benefit from buying a home. It's one of the first steps is an awareness and an openness to learning and looking. Okay. Second thing is you want to be able to help them view their world from the outside in, just like we talked about, all the cliches, can't see the forest for the trees, and opportunity right under our nose, all of those kind of things that we hear so frequently, we ignore them. How easy is it for us to see the opportunities for improvement or growth in the people around us? Thirdly, we want to help them keep them focused on steady progress and help them with the probability of chasing shiny objects, right? So that they aren't running around crazy and jumping off stuff that's irrelevant or unimportant frequently. You know, it's almost like becoming the running buddy for them. Think about it from this perspective. Let's say that I decide January 1st I want to lose some weight, so I'm going to start jogging a couple of days a week. So I get up, well, maybe not January 1st, because we all know what we're doing January 1st, early morning, right? January 2nd, I get up and go jogging. It feels pretty good. January 3rd, I get up and go jogging. Yeah, it's a little less fun, but I'm a little sore, a little tired. January 4th, I get up. I'm pretty sore, and it was a tough fight to get out of bed. January 5th, it's cold, it's wet, it's nasty outside. I really don't want to get up and running because I pushed it too far yesterday. I'm exhausted. I roll over, you know, hit the snooze button, cancel the alarm, roll back over, go back to sleep, and do I ever get up and go jogging again? Likelihood not. Now, let's say, for example, though, that I take a different path, and I happen to be talking to my neighbor or a friend at work at the Christmas party or the New Year's Eve party. I mentioned this idea of my New Year's resolution being to lose some weight, and I'm going to start jogging. And my buddy says, you know, that sounds like a great idea. Why don't we do that together? So January 5th rolls around, and it's nasty, and it's wet, and it's cold outside, and I really don't feel like getting up and jogging. But I know my buddy's going to be on my doorstep at 5:30. Likely it is, I'm going to go ahead and get up and go. You see, the reality is we all have that opportunity to be that resource, that running buddy for our business development partners. That doesn't mean we need the answers to all the problems that they're going to face. We just need to be the one who has the willingness and courage to have the conversation with them and brainstorm some ideas. So one of the things we introduce our coaching clients to is what we call the Power Partner Development System, how to attract, warm up, engage, and have an in-depth conversation about the goals and values and what we want to try and create together, and then leading that to a series of strategic planning sessions that we do with them to help capitalize on the opportunities that are out there in the market. So we do this through what we call the Power Interview, and it's a 5-phase conversation that starts with purpose. What are the personal goals? What are the visions of success? What's our why? Why are we doing this crazy business anyway? And what is it that really motivates us and drives us even when it's difficult or awkward? What gets us up out of bed to go do it again another day? Secondly, we look at objective needs. We look at the issues, the opportunities, the strategies that we could tackle that would have a huge lift. Brad and my friend and former Maximum Acceleration coach, Michael Mayer, coined the phrase, what's the one challenge that if you eliminated it would give you the biggest lift in your business? Probably one of those powerful conversations. I mean, you can have hours worth of conversations just off that one key question, right? I think he kind of stole that from us, didn't he, Brad? Anyway, the reality is, I mean, we're all facing challenges. Now, the thing is, we can't just stop with the challenges. Now we've got to shift our thinking to the solutions side of the equation, and we've got to start planning out what are the solutions to the challenges. And then we need to begin to ask a key engaging question. After we've spent 45 minutes to an hour talking with agents about different opportunities and ways and strategies that we can engage them, and we open the conversation by starting with basically an approach conversation that goes something along the lines of, well, Brad, at the end of the day, I don't even really want to start our conversation with talking about how to refer each other business, because I really want to find out, first of all, how I can be a bigger asset to you, how I can be a resource that's going to help you do more business in the coming weeks, months, and years, and how together as a team we can leverage each other's strengths and create a 1 and 1 is 11 type of effect. What I really would prefer to spend our time doing today is talking about different ways we can address the challenges that people are facing in the market and work together as a team to overcome them so we can have an impact on our community. What do you think? Does that sound like an okay place to start our conversation?
Yeah, and I want to jump in real quick, because when we're talking about starting that conversation, when you guys are looking in your marketplace and you're really truly looking at who are the top 5 partners that I want to partner up, whether it's an agent, whether it's a financial planner, CPA, whatever. When you create that, I kind of coach people on creating a hit list of the 5 or 10 most influential people that they would love to be in business with. Remember, when you're having these conversations that Erik is talking about, you still got to open that door. This isn't going to be your first call to them. And I know you guys are smart enough to figure that out, but I want to give you the easy open door. Is I am looking for a few individuals that really would like to take their business to the next level, and they'd like some help getting there. Are you interested in growing your business, or is everything fine where you are and you've got all the money you need in your account, and you've got all the time off you want? Because now what happens is you turn this conversation around to where I'm sitting on the other end of the phone, and you're making me want to find out how you're going to help me grow my business versus calling me and telling me, hey, I just was on this great webinar. I got all these great ideas to help you grow your business. When can we meet? You turned it around now. You say, hey, I'm looking for just a handful of people that really want to take their business to another level. Are you interested? Well, yeah, I'm interested. How you doing it? Great, let's get together. And then, man, you pour this stuff on that you got out of this webinar today, and you're going to be able to start that relationship and cultivate it into a partnership.
Awesome, awesome. Well, guys, I mean, the practical reality is Coach Brad just shared with you a very powerful concept of how to get the conversation started. You know, the reality is we've all experienced fluctuations in the market. We all experienced the laziness and easy days when the market, when loans were falling out of the trees. Obviously, that has eroded. Interest rates have popped up quite a bit. We've lost a couple hundred basis points in pricing. Rates have jumped from the mid-3s to the high 4s, low 5s. And now we've retraced some of that ground, but we've kind of stabilized in this market. But we're still dealing, even though interest rates are a point and a half higher than they were maybe 4 months ago, the practical reality is that they're still incredibly low historically. I mean, you'd literally have to go all the way back to pre-1950 to see interest rates that were this cheap, at below 5%. If you looked at the last 70 years of interest rate history, you would have to go all the way back to the 1940s, and if you did, you'd find that there was really only less than a handful of years where interest rates were below or substantially below 6%. And the great majority of that time, they were well over 7%. So what that means historically is we're still dealing with some of the best housing affordability in the last 80 years, which creates a massive opportunity for somebody to take advantage of the current market. And it's all about perception. A lot of times it's just, I mean, think about it from this perspective. You guys have all heard the yellow Honda effect. I know I've talked about it on this webinar series. It's the effect of a brain that what we're really thinking about is all we seem to see, and everything else kind of disappears, right? The car you just bought or the car you really want seems to all of a sudden be the only car on the road, and everything else disappears. Well, the cool thing about that brain mechanics, that part of our brain called the RAS, is it brings to our attention what we're already focused on. So if you're depressed, if you're diffused, if you're not excited about where the market is going because you're focused on all the challenges and obstacles in the market, all you're going to see is the obstacles. But the cool thing is that mechanical part of our brain doesn't judge. It doesn't know right or wrong. It doesn't know good or bad. It doesn't know the impact it has on your attitude. But we can control it. I mean, test it. Start looking for lime green Jeeps or red Ford pickups or whatever. All of a sudden, you'll notice that they seem to be all of a sudden the only thing on the road, and everything else kind of disappears. So what I want to challenge you to do is start the conversation with talking about what the challenges are, and then very quickly transfer that conversation into what are the solutions. Let's brainstorm some ideas and some concepts that we can control. So, we're dealing with things like the unprecedented housing opportunity, the opportunity for people to get a lot more house for the money. And one of the easiest ways to catch the attention of the people who just aren't checked into the game right now is to get them focused on and thinking about the opportunity by talking to them. The reality is we're trying to cast as big a net as possible and reach out to as many families as we can in the shortest period of time before this window of opportunity slams shut. And one of the things that we can think about doing is the people who are in the best position to benefit from the current housing opportunity market. Obviously, you've got your renters. Think about what $1,000 a month in rent or $1,500 a month or $2,000 a month in rent in your community looks like. I mean, what are the average rents in your neighborhood for a decent 2-bedroom, 1-bath apartment? What kind of house can you get for the same mortgage payment in that market? We've done this study, with hundreds of clients all across the country in every major or minor market that you can think of, and usually you find that in pretty much every market, you can get a lot more house for the payment by buying than you can by renting in the current market. So that creates a huge opportunity. You think about the families that have feel like they've been trapped in their home because they were in negative equity or underwater and they didn't want to go the route of a short sale. And now all of a sudden their property values have recovered enough to the point where they might be able to get out from under that mortgage and buy the home that really fits their family, because since 2006 they've had a couple extra kids and they're a little squeezed in that 2-bedroom condo or that 3-bedroom, 1-bath or 2-bath, 1,300 square foot starter home. See, all these opportunities are there for your picking, and the easiest way to reach out is just to start the conversation. At the end of the day, reaching out and doing home opportunity reviews with your past clients, similar to what financial planners do when they offer retirement portfolio reviews. Think about this for just a second. If I called you up, my past clients, and I said to them, at the end of the day, Mr. Customer, there's an amazing housing opportunity right now, and I just wanted to touch base with you and offer you a new service that we're putting in place, because right now is one of the best times in literally American real estate history to buy a home, certainly one of the best times in the last 80 years. What we're finding is that a lot of families are able to buy a lot more house for the money right now. They quit throwing their money away on rent. There are also opportunities to upgrade their property and take advantage of the housing affordability that is substantially better today than it was 5 years ago when those people had likely bought their home. So I just want to touch base with you and find out if there's any opportunity to help you guys. By the way, it's simple it's simple 3-step easy process here. One is go through a series of 5 to 10 minutes worth of questions with you just to identify if there's any opportunity. 2, let me do some research offline and see what I can maybe put together for you guys. And then 3, I'll call you back in a couple of days and let you know what we find out. Is there an opportunity to improve your situation? Do you have a few minutes to get the process started? By the way, there's no cost or obligation for the service. It's just something we feel is the right thing to do. Or another slightly more casual way of doing it is just a very off-the-cuff, hey, haven't talked to you guys in a while, just wanted to check in with you and see if everything's going all right with your house. Is it still meeting your needs? By the way, who else do you know that might be in a position to benefit? Like, for example, the client, the guy who's kept his nose clean, paid his bills on time, and has just basically stayed in the same apartment renting for the last couple of years. How many tens of thousands of dollars has he thrown away on rent? The interesting irony of it is that the people who are most likely to benefit from the current housing market are probably the least likely to be engaged. It's those folks who have just kept their nose clean, paid their bills on time, then focused on what they want to cover. Those are the people who have the opportunity to benefit. Oh, by the way, Mr. Customer, as you can probably tell, I'm pretty passionate about spreading the message about this Home Opportunity Initiative. I almost kind of look at it as kind of a mission type program. So let me ask you something. Would you mind helping me in fulfilling this mission and at least making sure that those out there who are most likely to benefit are at least aware of the opportunity? If not, can we introduce them to it? And look, I'm not looking to twist anybody's arm and force them into something that's not a good fit for them. I just want to make sure they're aware of the opportunity and able to make an informed decision about whether it makes sense for them or not. Is that okay? See, if we start to do those types of conversations and we start to introduce those concepts of those who questions, and by the way, I saw some questions come through the Q&A right here just recently that people were asking the question about go back to the slides. By the way, you guys are going to get a copy of the PowerPoint from today's program as well with all of these scripts and tools and questions to ask and everything. I know I'm ripping through a lot of information here really quickly. The main point I was trying to get to, guys, though, is that at the end of the day, there's a handful of conversations that we need to be having with business development partners, really talking to them about what their challenges are, how we can help them overcome their challenges, and then learning from those experiences. So really then taking it to the level of where we're engaging them, we're starting new ideas that have us reaching out through the connections we already have, finding one person we can help who knows 2 others, and those 2 know 4, and 4 to 8 to 16, and it literally explodes geometrically from there. What if every one deal that you're working on now turned into 3 or 4 more deals? How fast would your market explode, and how fast would those business development partnerships become highly profitable and effective? So I think about it from this way. Would you rather generate 10 leads a month on your own, or work with 10 partners who are totally committed to generating 1 good deal a month for themselves? What about 1 good deal a week? If you generate 10 partnerships that are totally focused on finding 1 solid buyer they could potentially help, and 1 solid seller they could potentially help a week, multiplied by 10 business development partners, you realize you'd be generating over 40 leads a month, even at that minimum level? And how many of your business development partners are going to be satisfied with only 1 lead a week? How many of them are going to be looking for 3 to 5 leads a week? And all of a sudden now we're talking a lot closer to that 100 to 120 business development partner leads a month. So what I'm going to do at this point is I've put a lot of information in front of you guys. I've shown you a lot of different strategies. So let's go ahead and take advantage of the opportunity to talk a little bit further about these. Let's go ahead and take some Q&A at this point. By the way, those of you who have to jump top of the hour, I hope you really have enjoyed the program. I encourage you to watch the last 5 minutes of this video when you get back. We're going to take some Q&A right here. I'm probably going to run about 10 minutes long with today's program, if that's okay with everybody, just because I want to be able to get to answer as many of these questions as we can. So if you would please go ahead and post these questions in the Q&A section of the webinar platform right now. Go ahead and get them popped in, and then we'll take these questions here in just a second. Brad, are you seeing any come across just yet?
Yeah, I've got one for you, and then I've got to jump off and head to my appointment. The one that came in was, so with all this information, Eric, I mean, it's really, this comes up a lot, is where's the first place to start? How do we, of all the people in our marketplace, how do we focus on the ones that we really want to be in business with and just take that first step to get going?
Well, my best advice, in all honesty, is don't focus on one particular whale. I mean, obviously, you need to build a target list to work through, but the reality is that it really shouldn't so much be about who, it should be about how many. If you set a specific activity goal, to build 5 to 10 successful business development partnerships over the next 6 to 12 months, and you start targeting a focus on those business development partners. So you create a target list of 20 to 30 agents that you want to go after. Let the path of least resistance guide you a little bit here, of the ones that are right and the ones that are good fit and the ones that have some issues, some interest in taking their business to the next level, are going to be the ones that are probably going to be in some of your most profitable long-term partnerships that you can create. But the other simple answer to it is begin with the end in mind. Start by leading with offering service first. Be the first to give, as Greg Frost said in the Maximum Influence series that he did for us based on the Cialdini principles of ethical influence. All right, Brad, I know you got to run, and since we're right at the top of the hour, guys, obviously I'm trying to pack as much information. By the way, just so you all know, this is a program that I typically teach as part of a 6-part webinar series that we teach for our clients. Actually, we're in the middle of that series still right now, but keep posting these questions in. I want to share with you just a couple of quick things that I need to share with you about taking this to the next level. We talked about the opportunity to be the business development partner to those agents. Simply starting by that approach strategy of offering to brainstorm with them, offering to share ideas with them about what we could do together to make an impact in the community and help the sellers and buyers that they're struggling with. Let's put our heads together and see what we can come up with to solve the challenges of the current market. From there, we go through a 3-phase conversation, assessment, planning, and execution. Now, by the way, many of you, have been asking, how does this all work when it comes to coaching? What is maximum acceleration, and what do we do? Well, in our coaching program, in fact, a lot of this grew out of my own and several other professionals' experience. Back in 2004 and 2005, the founder of Lone Toolbox, Tim Brahim, asked me to participate in the research and development project working with a team of top performers in the industry, guys like Greg Frost and David Kuiper and Jim McMahon and some other resource people, very top performing loan officers, people who've done billions of dollars in loan origination over the years. And through the course of that research study, we developed a coaching program that's built on a strategic planning model that you can use with your business development partners. And it's basically 3 phases of growth: assessment, planning, and execution. Anytime we want to go from where we are to where we want to be, we're going to go through these 3 distinct phases. We're going to look at our environment. Where are we? Where do we want to go? We're going to assess our opportunities. Then we're going to plan out action items, strategies to be able to take advantage of those opportunities. What do we need to do, for example, to get an effective and profitable home opportunity workshop off the ground? And what resources can we leverage, and how do those commitments need to be made? And then we need to step through, 1 meeting at a time, how to get that off the ground by working with our business development partners. Now, that's not, by the way, that's not the only way to generate more purchase business. There's tons of other experiences that you can use, tons of other strategies and approaches that we can work through with our business development partners to make a massive impact. In our coaching program, we then developed a strategic planning and business planning tool that helps walk you through all of the areas of opportunity for growth. And if you want to look at it from the model of a pyramid of a complete loan officer, this can also be very similar to the pyramid of a complete realtor. At the end of the day, it's basic nuts and bolts knowledge, what you need to be able to put a decent loan together and accurately pre-approve a loan. Then it gets into how we communicate our value proposition to the borrower and to the business development partners. Then it's how do we market, how do we get in front of people who can benefit from what we offer and the unique value that we create. And then it gets into operational systems. How can we expand our capacity to serve at a higher level and handle a larger volume of business than what we could do separately or independently? And that's where we begin to systemize or franchise what we're doing. And then we get into leadership and team building and legacy, which is about growing your business from 5 loans a month, 10 to 20, 20 to 40, and beyond. Some of the record breakers in our coaching platform are clients who have done over the years upwards of 70 or 80 transactions a month for an extended period of time and have built a practice around those concepts or ideas. What makes our process unique is that we drill it down into specific action items that are delivered to you one step at a time using our proprietary business planning tool. Now, for those of you who have been asking, many of you have been chatting in the question and asking these issues about, how do you get started with coaching? What does our program involve? So let me share with you just a couple of quick seconds here. One is you're going to start with the initial business planning conference call. You're going to get access to our entire proprietary tools and assessment tools. Then we'll get into, over a 6-month period, a month-by-month program, 12 one-on-one coaching in addition to the 2-hour planning session. You get access to our proprietary time tracker, performance tracker, and workflow productivity system, and you're going to get 6 months of coaching with a highly experienced and certified coach. Now, by the way, we renew in no longer than 6-month semesters. Now, frequently our clients are in our program 18 to 24 months and beyond because our program is built about creating habits that stick long-term, about transformational growth. But most importantly of anything, that content is driven to you one piece at a time. We also have touchpoint calls, mastermind meetings, and a whole lot of bonus resources that I'm going to share with you. But most importantly, we don't believe in long-term contracts. We believe in high accountability for both the client and coach, which is why we don't let clients renew for any longer than a 6-month semester at a time. And in reality, on our month-by-month program, we have a 20-day no questions asked cancellation policy. But, some of my clients felt so strongly about the value of the program, they wanted me to share with you their thoughts and ideas. So if you take just a second, for example, Adam Kernan from Charleston, South Carolina shared this comment. Thanks, Eric, for your coaching. I once thought I didn't have time for coaching. Boy, was I wrong. I didn't have time not to be coached. Because of your help, I just wrapped up the best week of my career, 13 new loans in a single week. This was about 4 weeks ago that he sent me this email and asked me to put it in the program. Another client, Randall Brower. This year, I more than doubled that, again, with 247 gross earnings through, by the way, this was sent to me in April of this year. First 4 months of this year brought in over 247,000. Does he think coaching's worth it? You bet, was his comment. The practical reality is our goal is to make sure the coaching pays for itself, that your coaching investment is yielding you a 2 to 3 times return on investment within 60 days, and we hit that goal about 85% or better of the time. Now, because it is extremely labor intensive and there's a lot of back-end hours, thousands and tens of thousands of hours of research material, tools and resources that have been developed to support the program, it is a little bit expensive, but we are talking basically a little over $1,000 a month. Well, the average loan officer, 1 or 2 additional loans a month is going to get you that 2 to 3 times ROI. By the way, we are running a special right now if you're interested in taking advantage of the one-on-one coaching program. Typical pricing is $64.95 for a 6-month semester. The lowest available during our summer sizzling sale is good through July 31st, which is tomorrow at midnight. You can get it for as low as $49.95 if you do a 3-payment option. In addition to that, we also provide with the coaching program access to a month-by-month. As long as you're enrolled in the active coaching program, you get free access to the Loan Toolbox, the Mortgage Market Guide, and the Mortgage Market Guide Weekly, as well as the Platinum Marketing System, which is a turnkey automated marketing system. It's one of the easiest and simplest set it and forget it, plug your database in and let it roll kind of programs. In addition to that, with that, you also get in the bonus package 6 months of the one-on-one coaching program worth $64.95. The assessment tools and growth plan coaching, which is $14.95 in value. The Maximum Influence series, which is a 6-part series done by Greg Frost, teaching you everything you need to know about how to win every sale every time through the ethical laws of ethical influence. That's a 6-hour audio program, webinar program. You're going to get our Trade Show Success Strategies home study course, how to generate hundreds of leads in a handful of hours through marketing and exhibiting at trade shows in your market. You're going to get access to our tools library, over 4,000 individual document, Word, spreadsheet, tools, scripts, materials that you can use as you build your business, access to the library. The Maximum Acceleration Dashboard, which is a pipeline tracking and performance management tool. The Maximum Growth Summit home study course, help you get the most out of every seminar you ever go to be able to come home from that, literally a couple of hours flight home. You'll be able to have a specific action plan to take action on your best ideas from that conference on the DVD home study course. In addition, you'll get the Power Tools package with Loan Toolbox, Platinum Marketing, Mortgage Market Guide, and Mortgage Market Guide Weekly, included on a month-by-month basis as long as you're enrolled in the active program. Total value of all the bonus items is over $12,000, and again, you can get it for as little as $49.95. If you're interested and you're serious about taking your business to the next level, if you'd like to talk one-on-one with our coaches, the best way to find out the true value of coaching for you, schedule a time to have what we call our strategy session. By the way, if you're interested in taking advantage of the if you're ready to get started right away and you want to go ahead and get involved in coaching and you feel Maximum Acceleration would be the best resource for you, there'll be an attachment with an enrollment form on the follow-up messaging that we'll be sending out with today's program. Now, I mentioned at the top of the call that you wanted to stick around to the very end, so those of you that have stuck with me through the end of the program, I want to make sure that you get the advice and guidance that you need. Oh, by the way, next week coming up, the top 7 strategies to obtain more purchase business with marketing expert Jonas Krugerberg, a former top-producing loan officer and originator in California. He is now Vice President of Sales with Top Mind Networks, which is a great system that you all need to check out. If you want more information about next week's webinar, mxlcoach.com/webinars is the next one up on the roster. Now, other things to think about, live events that we'll be presenting at and exhibiting at. I'll be out at the California Association of Mortgage Professionals Conference in San Jose the 14th through the 16th of August, about 2 weeks away out in San Jose, California. If you're interested in attending that event, if you're on the West Coast, it's going to be one of the best programs, one of the best state conventions on the West Coast all year. And again, we'll also be exhibiting at and running the Maximum Growth Program Planning to Win 2014 at the NAM National Conference in October, so be watching for information about that. Now, I promised all of you you'd have the opportunity to take advantage of best ideas. Now, the best thing you could do before you leave this program is take 5 minutes to plan out what you're going to do to put in play one of the ideas that you got from today's program. Now, as I mentioned, as soon as we are done with this program, we'll be wrapping the video. Now, keep in mind, be patient because it does take several man-hours of work to render the video and format it so that it plays well on YouTube. That takes my team a couple of, usually it takes about 48 hours to get that done. So by midday Thursday, you should have an email with follow-up information about how to take advantage of and the video that comes along with this, along with the PowerPoint that we've used for today's program. That's being provided totally free as a thank you gift for investing your time in today's program. But here's the reality. You've gotten some great ideas today. Worst thing you could do is nothing with them. Ideas without action are completely worthless and have no value. If you don't take action with those ideas, you might as well just have taken a nap for the last hour. But if you're serious about getting value out of the hour you've already invested, then take 5 more minutes to put it in play. So the first thing you want to do is ask yourself the question, what was the most valuable thing you heard in this program? What is the one idea that you want to take action on from today's program? Remember, you'll have the video, so you can go back and pick up idea 2, 3, 4, 5, and 6 later on replay, right? Second thing you want to do is you want to decide what action do you need to take to make that a part of your daily business. So, for example, maybe you want to start reaching out to more agents in your market and talking to them, brainstorming with them about how to do a home opportunity initiative type program, whether it's through leveraging employers in your community or working with insurance agents or those kind of things. Or maybe it's just you have to start calling your own past clients that you haven't talked to in 5 or 6 years and talking to them about whether there's an opportunity for them to improve their housing situation in the current market and take advantage of this housing opportunity. You know, maybe if you just started calling 5 past clients a day, how quickly do you think you'd find an extra couple of leads a week of people who are relatively serious about buying a home? What if you got 5 or 6 other business development partners to do the same kind of campaign in their own database? How quickly would you be starting to talk to 30 or 40 homeowners who may have some opportunity to upgrade their current property? What's the first step, though, in taking some action? Is it schedule 30 minutes to review and practice the home opportunity evaluation offer script? Map out the bullet points and start actually making those calls. The third thing is decide by when you're going to have that action implemented. Set a specific target date to shoot for, and we'll see what happens. The fourth thing then is decide who you're going to work with as an accountability partner. Who are you going to ask to follow up with you so that you have a 95% better chance of actually following through on implementing these ideas. Now, of course, if you'd like our help with the accountability piece of that, like I said, if you're welcome to take advantage of the offer for a strategy session with one of our professional coaches, it's a one-on-one appointment to get some coaching on a specific issue or challenge you're facing and get some direct guidance on how to overcome that challenge. You'll leave the appointment with a complete action plan and all the tools and resources you need to take advantage of that or overcome that particular challenge, and along the way you'll find out whether coaching would be the right fit for you or not. By the way, there's no cost or obligation for the strategy sessions. If you're interested in taking advantage of one of those, you can jump to the website you see on your screen and sign up for it, or you can also go ahead and just post in the Q&A section of today's webinar platform your request to schedule a one-on-one strategy session with one of our professional coaches. By the way, they are filled on a first-come, first-served basis because all of our coaches are pretty close to maximum capacity. We only have literally a handful of strategy sessions available each week. It may be next week before we could get you on the schedule, but we will work you through. But they are filled out on a first-come, first-served basis. So if you want your best shot at actually getting a strategy session soon, go ahead and give us the best phone number and email address to be able to contact you for one of these strategy sessions. And go ahead and post that in the Q&A section right now. Otherwise, we wish you all the greatest success. The best thing you could do for yourself is take the investment that you've made with the time that you've put into today's program, do something with it, and make a difference in the lives of the families and people that you have the opportunity to touch. We literally have the best housing opportunity of the last 5 generations. So what moral obligation do we have to spread that message as wide and as far and as fast as we humanly possibly can? And if there's anything my team or I can do to help you along the way in that initiative, please don't hesitate to ask. Otherwise, I look forward to seeing you all on the next installment of this webinar series, and we will talk to you later. Make it a great week, everybody.